It's a movement that's bigger than any one company. And there is something really meaningful about being part of a movement whose time has come and getting to be on the front lines of helping to carve the path through the forest.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Hunter, thank you so much for joining me today. Super excited to chat with you. All right, Hunter, you are the co-founder and CEO of Bitwise Asset Management. Bitwise is a leading crypto asset manager specializing in providing investors with access to crypto through a variety of products, including index funds, ETFs, and other strategies. Before starting Bitwise, you were a product manager at Facebook and Instagram. All right. So at what point did you realize that, because by the way, you started Bitwise, I think in November of 2016. So way before, a huge number of folks that are now kind of very prominent in the industry. At what point did you realize that crypto was a place that you wanted to spend the majority of your time and effort?
Woo! It's great to be with you, Andrew. And that's an interesting question, and also kind of takes me back. So, I think that crypto is off-putting to most people initially. When you say the phrase decentralization, that sounds like a mess to most people. Decentralization is sort of a feature, not a benefit, or a characteristic, not a benefit. It's like saying that a car has 400 horsepower. That's a characteristic. Only certain people understand that the benefit of that is speed, acceleration, and ability to pull weight. So, because the space so often describes its characteristics, decentralization, but not its benefits, which is trust, the lack of intermediaries, which flow from decentralization. I think to many people, and me at the time, it's not immediately obvious how this makes the world better, why your mother or your brother is going to benefit from it. But something important happened around that time, which is that the space, which had been almost entirely Bitcoin, around that time, Bitcoin started to drop for the first time in history from 95% of the market by market cap down to ultimately in April of 27, I think it was 50 or 60%, which had never happened before. And what that represented was not that Bitcoin was losing value. Bitcoin was actually growing in value at the time, but that Ethereum was ascending. And Ethereum, beyond just the specifics of Ethereum ascending, I think was important in that it represented a widening of the aperture and the idea that the space may not just be one asset in one project, but an asset class. And that a public blockchain could be deployed not just to create an apolitical digital store of value, but that it may represent a platform that people could build applications on, that have users, that people could build services on, and could express just a lot of additional views. You could almost think of it as, before Ethereum is almost like if the internet was just being used for email. Everyone would say email is a miracle. I can get a message to you so much faster than sending something through the mail. And that was sort of Bitcoin. It's a miracle. It's incredibly important. But if the internet was just email, it would limit the aperture of what entrepreneurs can build, the businesses, and the space. And I think Ethereum at that time indicated that maybe the set of things that were possible here was wider. And to us, that was really, really captivating and exciting. So the fact that was happening at that time was very relevant to our view of the space. And then the other thing I'd say on this topic was that having been at Facebook, there are a few things that I saw firsthand there that kind of primed me to be compelled by public blockchains. The first was that, when I was there, I think Facebook crossed 1 billion users, and people used to say back in the day, "Wow, it has more users on Facebook than the Catholic religion." And people were just stunned, myself included, at the incredible reach of the internet. The fact that you could build something on the internet and it could get to 1 billion people. The second thing that I saw at Facebook was just how fragmented the world was. on the surface level, if you want to send messages around the world, or you want to send photos around the world or videos, that's totally doable. But as a product manager at Facebook, if you wanted to build something that involved a financial service or commerce or retail, whatever, if you went any deeper than just sending media, text or images, it got very hard. And you had to deal with 170 plus currencies, banking systems, regulations, infrastructure, telco infrastructure. And you could see how the world was more transparent than ever before, but standards were still very fragmented. And then the third thing you could see at Facebook, even when I was there, although I left before it really came to a peak, was that people were losing trust in business leaders, in political leaders, in leaders of institutions like educational institutions, um, which I think Facebook was partially responsible for. Facebook, was founded in 2004, but effectively gave every human a blog with 500 readers. So prior to Facebook, the way that you understood what was going on with a business leader or a political leader was whatever storyline the nightly news and the newspaper shared with the public. And almost like the printing press enabled 10,000 authors, Facebook enabled a billion authors to report their version of the story, their experience of events, and allowed more stories to reach the public. And those stories were not always the same as the story on the nightly news, and I think started to fuel a distrust of leaders. So you have sort of a distrust of leaders. You have a fragmented set of standards around the world, but you do have the amazing scale of the internet. And so through that backdrop, you see public blockchains, which say we're going to leverage the incredible scale of the internet to reach people, but we're going to enforce one universal global standard. The Bitcoin consensus protocol, the Ethereum consensus protocol, that is one global standard. It applies and is affected the same in Sri Lanka as it is in America. And we're going to deal with this messy issue that you don't trust Comcast to do what's in your best interest, or a bank, by getting rid of the business leader and the corporation. And we're going to create a system that's peer-to-peer. And to me, that seemed profound and like the sort of thing that made sense to emerge 2 decades into the internet age, and like the sort of thing that could have a chapter in a history textbook. And so I'd always admired the people who worked on the original Mac Lisa or the iPod, or early PCs, and thought if we could find a way to contribute to the emergence of a new sort of globally relevant set of platforms, that would be a really meaningful way to spend time in our career. And so again, the sort of emergence of Ethereum and a broader aperture for the space sort of had our attention, and then the lens that I just described on what does it mean was the reason that we sort of had conviction that we wanted to contribute if we could.
And so the initial ideation of Bitwise was, hey, this revolution essentially is coming, or is happening now. We want to partake. The best way for us to do that is to create a firm that can, give these assets to everyone in a very easy manner. Or what was that initial ideation of, like, okay, this is what we're going to do?
I think we have some time, so why don't we actually get into it? So my best friend in college and roommate was a gentleman named Hong Kim, who was a brilliant software developer, and we loved working on things together. Just for fun, on Saturdays in college, we would build things. I graduated, went off to Instagram and Facebook, and Hong approached me and said, "Why don't you quit your job and we'll start a company?" And I said, "That sounds like a terrible idea. I love my job." But eventually, we were exploring things, and ultimately 3 investors offered to invest if I would quit my job, and we sort of explored full time. And the opportunity to work with Hong, the opportunity to have the backing of these 3 investors, made me feel like I would regret not opening that door, even though it was a very frightening door to open, because I love my job, I love my bosses, and I wasn't sure what was behind the door. So the actual series of events, which I'll just share, for fun or to the extent it's interesting to listeners who are entrepreneurs, is that I quit my job and we didn't know what we would do. So moved out of my nice apartment and we started working out of a living room in Haight-Ashbury above a tie-dye store. Um, and on both sides of the tie-dye store were tattoo parlors. So it was tattoo parlor, tie-dye store, tattoo parlor, Bitwise. Um, but at the time, it wasn't called Bitwise. It was called Locust Studios because we didn't know what we were going to do. And Locust Walk is the name of the main thoroughfare at University of Pennsylvania, where myself and Hong both went to school. Um, so uh, we, sat in that living room and thought about what we wanted to do, and that sounds fun, and it's fun for about 4 weeks, and then it's not fun at all. And your friends eventually becomes apparent to you that your friends don't that the line between starting a company and just being unemployed is quite a very fine line. So went from the cool job and the cool apartment to this living room and vaguely unemployed, maybe starting a company, but not sure what the company is. Um, and then again, we were sort of fortunate that at that time, um, again, crypto, the vision for what crypto might be was rearing its head, and it's two software people in San Francisco that got our attention. And as I mentioned, the first pass, it's going to decentralize money. It's not obvious, I think, to the average person how that benefits you. Um, but then as we understood it or spent more time thinking about it, it really felt profound to us. Almost like, when if, for people who can remember all the way back to their early education, the separation of church and state. There's some profound ideas embedded in the proposition of crypto that, is not maybe the focal point of discussion on Twitter every day, but is certainly latent in what we're talking about here. And I shared my lens for viewing it. So he said, gosh, this is such a meaningful thing. The why now is clear. Um, but then if you want to build a company, you have to solve a problem for people. It's not enough to just have an interest. Um, and um, and so the world doesn't sort of organize itself around people who want to start companies. People who start companies have to organize themselves around what the world needs or problems that the world needs solved. And we were looking for something to do in the space. Uh, and so we were talking to a lot of people about crypto, and a common refrain that we would hear. I went to the Wharton School, so I have friends working at Goldman and in buy side private equity, and friends from Google and Facebook. Hong had worked at Google, and a common refrain we would hear from people of both worlds, tech and financial services, was, "I'd like to invest in crypto, but I don't have time to figure it all out and be constantly monitoring it." And at some point we heard that specific refrain, word for word, from enough people that we thought, huh, I mean, these people are the most tech savvy and financially savvy people in America. And if they feel that way, how is the average person going to reckon with this space? And, um, and so then we thought, well, how does the average person reckon with other asset classes? How do they navigate municipal bonds? How do they deal with corporate debt? How do they deal with private credit? How do they deal with um, private equity? How do they deal with emerging markets? And um, sort of, the obvious answer there is that they leverage asset management solutions where a professional firm is uh, doing the investing and then providing access to it, um, and often through a financial advisor. Um, and if you looked around in 2017, all of the if you wanted to invest in crypto, all of the solutions were really brokerage. So you could basically day trade coins, or day trade might not be the right characterization for some people. You could buy coins and hold them in a brokerage account. Um, and so there's Coinbase and Kraken and Poloniex, if you remember that. Bitfinex was a big dog back then. And then there were solutions being built for professional traders, hedge funds. But those things are important components of most asset classes. People certainly trade stocks. And even some people trade bonds and derivatives. But that is a minority of how most money is invested. Most money is invested through asset management solutions, and a lot of it is delivered through investment professionals, be it wealth managers or institutional investors. And nobody was building a solution for that. And again, this prompt, I'd like to invest in crypto, but I don't have time to figure it all out and be constantly monitoring it. And then this realization that there probably need to be asset management solutions if the view is that public blockchains are going to scale, be very important, and thus you have a new alternative asset class in the form of digital assets. Then a lot of people are going to need those types of solutions to reliably participate over the next 20 years. And building those solutions to us felt like a company-sized undertaking. That was something that you will need to assemble, build a company around, bring together a great team for capital, and build something durable to solve for that. And then maybe the last step of the thinking, and I'm giving you the most unbelievably long-winded answers, Andrew, but was okay, great. But you have two software people. What the hell are software people doing thinking about asset management? And our thought there, which is probably also included some naivete, but our thought, which I think has borne out, was that if you want to be best of breed in this asset class, so if you want to be a best of breed real estate asset manager, you need fiduciary investment management. You also need to understand zoning. You need to understand the difference between Lower East Side and Chelsea, and the blocks within those neighborhoods. You need to understand building materials, general contractors, and so on and so forth. And our view was this asset class is open source software. And so you probably, to be best of breed at it, need to marry fiduciary investment management with sort of a native understanding of software development, platforms, applications, version control, the implications of the fact that the iPhone is written in Objective-C, and the implication of the fact that Solana is written in Rust. If you want to be best of breed in this asset class, and thus that it may actually not be so crazy for software people to start the firm and then build a team that includes investment management, such that you have both sides of the DNA to navigate this for clients. So that was the thinking, and we love the space. And ultimately, I think we've discovered that we love the work even more than we could have imagined serving our clients. But that's sort of the long-winded version of how Hunter and Hong wound up starting Bitwise.
That's amazing. Okay, so how was the early traction? Because if you guys just launched this product or launched this company, and yeah, like who are the people you're even talking to back in, it's got to be what, 17, 18 now?
17, yeah.
17. So who are those folks that are wanting to get access through a Bitwise kind of product?
Yeah. So we then sprinted to create the first index fund for the space, which again, if for somebody who hasn't sort of fallen asleep with what I'm saying here, and you can see how that's pretty compatible with the line of thought that led us to starting Bitwise. Index funds are a solution that are very broadly useful in different asset classes, and so we sprinted to launch the first one. We were initially going to call it the Bitwise HODL 10. And then we thought maybe a HODL is too much of an inside joke. And actually just tell a brief story on this, and then I'll return to answering sort of who are the clients initially. We then changed the name sort of to the Bitwise Hold 10, which we thought maybe would be a wink at the people who know what HODL is, but not alienating to the people who don't know what HODL is. And I remember there was a very wealthy executive at a tech company who was going to invest in the fund after it launched, and ultimately decided not to. And I pinged one of my colleagues and said, "Oh, what was the thinking?" And they said, "Well, he saw that the fund's name had changed from the Bitwise HODL 10 to the Bitwise Hold 10, and was really put off by the fact that we had a typo in the name initially and had misspelled the word hold, and that wasn't a good sign about our attention to detail." And that sort of
That's brutal. That's brutal.
yeah. So initially, when we first launched, it was really high net worth individuals, a few wealth management firms, and a few institutions. Um, I would say more generally, and we launched, we announced what we were doing. Laura Shin back in the day was the only sort of um, reporter at a mainstream publication, then Forbes, covering the space. Laura is fantastic, um, and so she covered the launch. And we had just a ton of demand come inbound, um, and we were only two people at that point. So we were then sort of sprinting to juggle it all and hire and so on and so forth. And we also raised a seed round at that time. So it was a lot to juggle. But on the clients, I would say that, I think Bitwise's experience over time, and then I can tie off this answer, but Bitwise's experience over time has been that um, who's investing in Bitwise's products is often less about Bitwise and more about which parts of the investing universe are interested in crypto in general. So it's not that there are certain types of investors that we prefer or are willing to serve and others that we aren't. It's actually often just a reflection of which types of investors at any given time. So in that case, 2017, have conviction on the space. And back then it was a lot fewer institutional investors and wealth managers and primarily individuals. And then just for the nature of our product, they had to be high net worth individuals in order to invest.
So today you guys have, we'll call it like 4 categories of products: ETFs, publicly traded funds, active strategies, SMA strategies, private funds. When you're deciding to create a new product, is it just customer feedback, or how do you guys go about that? Like, who decides, oh, actually, we need a new SMA strategy? Like, how does that form?
Yeah, the way I think about Bitwise's franchises today is actually I think I know it's a little bit different, but I think about it as sort of 3 franchises. I think about us as having market access vehicles. So these are vehicles that help an investor get an exposure. They want exposure to Bitcoin. They want exposure to Ethereum. They want exposure to the asset class writ large. So we have a Bitcoin ETF in the US. We have one of the biggest Bitcoin ETFs in Europe. We have one of the largest Ethereum ETFs in the US. One of the fastest growing, two of the fastest growing in Europe, actually, one with staking, one without. We have the largest crypto index fund in the world. We have an ETF that holds equities. If you say I'd like to own the companies, I'm excited that maybe Circle will go public. I'm excited about a few others that I've heard might go public. I just want exposure to this sector in the same way maybe you want exposure to the AI sector or financial services sector. So those products are generally professionally managing, um, uh, just getting exposure and then trying to put it in formats that allow people to do that the way they want to. So, for instance, something that I think some people don't always think about with the Bitcoin ETF, as one example, is that by being in the ETF format, there are all sorts of benefits around institutional custody, the peace of mind you get from the fact that BNY is doing the books and records and KPMG is auditing them and Bitwise is supervising it all and trading it efficiently. And it's a security, not a bearer instrument. But it also, if you, Andrew, or I wanted to go buy some Bitcoin today, it's pretty easy to do in a taxable account through Coinbase or Kraken or what have you. It's a lot harder to do in your IRA. And so that I think for individuals gives you a little insight into how the vehicle itself can really be enabling. In the US, individuals have twice as much money in IRAs as they have in retail brokerage accounts. So think about that. If it's really hard but much larger of a universe in IRAs, then that's really enabling. So, anyways, the first part of Bitwise franchise is market access, just helping people get exposures they want. The second part is alpha and custom solutions, which is really not very well known, in part because they're generally a lot of what we do there is private. So, for instance, we have a number of clients who have a lot of Bitcoin and they want us to generate yield on it, or they want us to write options on it. We have a client, an institutional client, who asked us to write options on 1,000 Bitcoin that they held to monetize the volatility, generate income for them. They want to hang on to the Bitcoin. family offices that have hundreds of Bitcoin and want us to generate yield. So because that doesn't happen in an ETF, people are less familiar with it. We do that through separate accounts or private funds. Um, Jeff Park is very involved there. We did just launch 3 ETFs. The tickers are IMIST, IMRA, ICOI, that are option strategies on top of MicroStrategy, now Strategies stock, Coinbase's stock, and Marathon stock, where we leverage some of what we do in the private and alpha franchise in a public vehicle, generating income by selling options, harvesting the volatility. I'm very excited about those. But so that's the second part. And then the third part, which is also not as well known, is that we're one of the largest staking providers for today, Ethereum and Starknet. And we're also building Solana at the request of a client. And here we serve several dozen large family offices, institutional asset managers, and a few financial institutions. And that's non-custodial. They're not funds. They use our non-custodial staking solution, and they might be custodying in a variety of ways, but they hold the spot asset and then use their technology to stake it. And then, I think they like having the client service of Bitwise, the reliability of Bitwise, our support on audit, tax, compliance, etc. So those are sort of the 3 different parts of the business today. How are they all interrelated? They're all interrelated in that our view is that our job is to build a best of breed alternative asset management firm for this space that people can rely on for decades, which is for many investors their time frame. They don't want to be worried every 12 months or every 24 months about if their asset management partner lost a key employee or burnt out or got so rich that they're not as passionate about it anymore. And just like they rely on Apollo and Ares in credit, or Blackstone in real estate, or KKR in private equity, Bitwise is striving to be that type of relationship in this space. And then we want to have solutions to support what they want to do. So they might own Ethereum and they want to stake it, but they also want to purchase Bitcoin in a trust or in a tax advantage retirement account. And so they also want the ETF, and they also want to access our multi-strat solutions that harvest volatility. And all 3 of those things can be true of one investor. And then they have a durable relationship with Bitwise that can provide insights on the regulatory front, the operational counterparty landscape, as well as the market. So that's the thinking behind Bitwise, and how those different components of investment solutions are interrelated ultimately in helping the client, who is often very busy, participate in the opportunities in this space.
Yeah. So how the needs of the client changed over the years? Because, I imagine early on it was like, hey, I want access. Then it evolved into, hey, what are your custody solutions? I want to make sure this is very secure. I mean, that was kind of like the entry level, this is what we need. Now, are the clients really looking at, okay, I don't know, I'm bullish on Bitcoin. Like, what can I do with this Bitcoin now? Or like, are they looking for like the alpha now? Or what are the customer and client demands or wants?
We're not much more into the weeds of the Bitwise business, but I would answer that 2 ways. On the investment solutions front, I think it's obvious to everyone that people are interested in investing in Solana more, over the last few years than obviously 2018. There's always been a journey of sort of betas that people want. I think that later this year, people will be even more interested in investing in public crypto companies, in a way that they heretofore, maybe, Coinbase is public, Galaxy trades in Canada, they're the miners, but it's not a huge universe. So that's always sort of developing. I think the thing that really feels more unique to me now is that options have really opened up. So people are very interested in alpha. They're very interested in generating yield on their assets. There's lending, there's staking, there's derivative strategies. And they're more interested in sort of, I would just say, solutions, basically. I'm trying to do X. I actually don't want to DIY it. I'm not comfortable setting up a wallet for this thing, bridging the asset, and then monitoring the pools. Can you create a solution? Because I do want to take advantage of the opportunity to generate yield on this thing. Or I have a sense that high frequency trading is actually a pretty good strategy in the space. Is there a way I could participate in that? So I think that if there's something that has developed more over the last few years, it's that beta is always there, and which assets do I have conviction in? But derivatives, yield, alpha trading strategies, of course, staking. We just get a lot more questions about that to help clients with that. So that's on the investment strategy side. There's just so much to do, even though we already have 30 solutions. Again, not all of them are ETFs that people can sort of publicly see. Um, but again, that's sort of investment products. There's a huge part of what Bitwise does, which is just be a partner to our clients. So, I think for many of our clients working with Bitwise is over 100 people today across the US and Europe, offices in New York, London, San Francisco. I think for a lot of people, the space is daunting because it's so complicated. It's the intersection of macro, software, the esoteric sort of patterns and market structure of crypto. And for a lot of investors, it's a smaller portion of what they do. It's not 100% of what they do. Now, certainly people who have a lot of Bitcoin, it can wind up becoming a very large portion of what they do, but they want leverage on their time. And if they have a lot of Bitcoin, they also often want leverage on their time because they have a lot of wealth. And they say, I know enough to know that this is complicated and there are a lot of ways for this to go wrong. And so I think on the client side, we're just asked to do more and more to support people. We're gosh, we do, over 10,000 meetings and calls. We'll go speak at a bank's private summit for 150 of the wealthiest families in the world in a month or two. We're doing a train for 800 of the top advisors of another bank. There's a wealth management platform that has asked us to go out and meet with all 120 branches to train their advisors. We get inbound questions every day from clients. There are 2 sovereign nations that are asking us to do analysis so they can think through how they want to play the space. So in terms of sort of providing analysis, providing education, and just being a sort of reliable and pleasant to interact with human that can give them leverage on their time, feel like they bolt a team of 100 people onto whatever their internal team is, that has really increased, just the requests around all of those types of things. So those are the 2 things that I think, and on the second one, there just didn't used to be as much. It's like you either thought Bitcoin was a good idea or not, but there wasn't all of the quite as much of the need for meetings and analysis and so on and so forth. So those are the 2 things that I think have both expanded over the last few years, and I think will continue to expand for some time to come.
Very cool. All right. So how do you think about building a moat within the business of crypto asset management?
Sometimes I think that people have this impression that like crypto has never happened before. We've never seen something like crypto before. But at least from an asset management context, we've actually seen it happen many times before. So in the 70s, one of Bitwise's backers is Henry Kravis. Um, I can't remember if they were at Bear Stearns or Drexel Burnham. I believe they were Bear Stearns. They left to what ultimately they did is they invented private equity. In the 70s, there was no private equity. There were no leverage buyouts. They called his first fund, which was a $25 million fund, a bootstrap acquisition fund. And they called it that because the term private equity didn't exist yet. And that began the journey in the 70s of the introduction of that new asset class. In the, was it the 80s or so? What at that time was sort of untouchable, non-investment grade corporate bonds, sometimes called fallen angels, got developed into junk bonds, and then ultimately got developed into high yield bonds, which are now part of many, many portfolios. In the 80s and 90s, particularly in the 90s with the savings and loan crisis, you had the advent of alternative credit, which today we call private credit or private debt, and has gone on a journey of introduction as a new alternative asset class. Emerging markets as an addressable asset class really showed up 90s, early 2000s. The introduction of the concept of bricks was really important to that. So I think from an asset management perspective, the idea that there's a new alternative asset class is actually not new. It sort of doesn't happen every year. It doesn't maybe even happen every 5 years, but it has certainly happened before. And so Bitwise is building a new alternative investment manager for a new alternative asset class. Um, if you say, well, um, uh, how does Apollo or Ares or Cliffwater or BlackRock build a moat around credit? Um, I think the answer to some extent is you need in this business, your people are your product at some level, and you need to build a uh, really high substance, talented and thoughtfully brought together set of capabilities and people and a culture. Um, and you need to make that durable. In asset management, I think decades are sort of the unit of time that people want to believe that they can rely on you for. And then you need to do well by your clients, and you build a track record, you build a reputation, you build a relationship that builds trust. Um, so that's sort of the story of every asset manager. There are lots of asset managers. It's not a winner takes all type of business. Um, and I think the Bitwise's role is to just be the best of breed specialist asset manager. BlackRock does credit. Is BlackRock a credit specialist? No. BlackRock now also does digital assets. BlackRock also does fixed income. They do public equities. They now do infrastructure investing. Um, is the fact that BlackRock does credit mean that Apollo and Ares don't have a valuable proposition? No. Um, so I think similarly for Bitwise, our position is we're not BlackRock. We don't serve every asset class. We serve this one asset class. We should be really good at this one asset class. And some people will want to work with a best of breed specialist, and other people will want to work um, with a familiar brand name that they can trust that has a very well-known reputation like BlackRock. And I think that can make a lot of sense too. And both coexist in most asset classes. And so our job is just to earn earn the reputation and build the capability and quality as a best of breed specialist. And so that's what we're striving to do. And I think if we do that, like in most other alternative asset classes, it's very durable.
Very cool. Okay, so and you can you don't have to answer this directly, but what part of Bitwise's business is growing the fastest? And then is there a is there a business line or product that you think is a sleeping giant?
The market access is growing very quickly. Um, I think the unique unit or metric on that side is just the quantity of clients. Um, the If one just looks at dollars, I think it's exciting, but it's actually even more exciting if the unit is if the metric you're looking at is the clients. So in the first quarter of this year, as Bitcoin went down from 110 or 105,000 to 80, we had 190 wealth management teams, RAs, multifamily offices, institutional investors invest in a Bitwise product for the first time. Sorry, in a Bitwise market access ETP for the first time. That to me is so unbelievably exciting and indicative of a new sort of mainstream chapter that we're entering, where this alternative asset class, again, every alternative asset class has to go on a journey. Non-investment grade bonds were untouchable. Then they became junk bonds, which are only for certain players. And there's a shroud of uh, low class to that asset class. Then it became high yield bonds, and it was mainstream and available to everyone. And I think to me that's very exciting. Um, we're seeing a ton of requests in the alpha private custom solutions front. People who are sitting on meaningful amounts of digital assets and want yield, or they want an options overlay, or they want option straddles, or they just want OCIO, or they want a whole host of things. I think um, it's very exciting to me in that people are sort of opening the aperture in what they want to do, and there's a lot of assets there, and then staking just continues to grow as you might imagine.
All right, so you've been around for multiple cycles within crypto. What was it like building in the bearish markets of, like, we'll call it 18, and then I mean, say what, 23? That was 23 was pretty bad. So what was it like building a company in crypto during those periods of bearishness?
Yeah, I think we've lived through many bear markets and parts of the cycle. We were there for the sort of ICO bubble of 2017. We were there for the crash of 2018. Eh, I think if I remember correctly, I think Ethereum was down 90% in 2018. Um, which is crazy. I remember I went on Bloomberg with this anchor that I love named Emily Chang, Bloomberg Tech. Went over to their studio in San Francisco, which is on the Embarcadero, and went up into the studio, and they put like powder on your face or something, and there's all these bright lights, and the anchor's just sitting there doing the show, and you're sort of sitting in the wing, and then they take you to the seat, and it's kind of a funny interaction because the anchor is doing the show, and and then at some point the segment starts, and the anchor is looking at you, and you're looking at them, and the camera's on. I don't love public speaking, and so I'm just thinking like, what does my face look like right now? And it's 2018, and Ethereum's down like 90%. And she goes, so do you think you're going to try to get your job back at Facebook? Um, and I was like, wow, what a sign of the times.
Wow.
Um, so we lived through that. Of course, market was down 2018. Usually with these cycles, this sort of the year that you have a contraction, that was a dramatic one. But then the following year is also sort of filled with apathy. People are just, even if the market's not down, even if it's up a little bit, they're just burnt out. Um, 2020 was, of course, also rocky with COVID, and there was the BitMEX flash crash in March. The S&P was down over 10%, I think, in a day or in 2 days in February and March of that year. Ultimately, 2020 ended up being a great year, but the beginning of 2020 was quite dramatic. And then 2022, Bitcoin, I think, was down 60% that year. And the Qs were down, I think, about 20%, and everything was down in 2022. So we lived through many of these moments. And I would say, importantly, we have been responsible for other people's money during these moments. So it's our job in those moments to, first and foremost, protect client assets. So Silvergate's going down, First Republic's going down, Signature's going down, Genesis is going down, BlockFi's going down. Like, we cannot, there can't be any issue. It's not like a little bit of issue. There can be zero issue. It's other people's money. You can't lose 10 of the $1,000. You lose zero of the $1,000. So a lot of that moment was, and is always, just navigating the operational and counterparty ecosystem in with excellence for clients to steward through those moments, and then also showing up for clients and helping them understand what's taking place, what are the risks, what are the developments. So that's sort of like a commentary on what we've been through. I'm really proud of that because we have a 7-year track record through all of that. Uh, I think that from just sort of like a personal level, nobody has to work in crypto, and in fact, most people at Bitwise, um, life would be so much better if they didn't work in crypto. Like, the friends would, more people would admire them. They would have to deal with all of the yelling between different crypto communities, and the volatility, and their significant others and families having moments of wondering. Um, so, but I think that the magical thing about crypto, which is true in bear markets and bull markets, is that it's an asset class, it's a new technology platform, but it's also a movement, and it's a movement that's bigger than any one company. Um, and there is something really meaningful about being part of a movement whose time has come, and getting to be on the front lines of helping to carve the path through the forest. In our case, help people make sense of it with the precious little time they have, and safely participate in it. So I think that at Bitwise, even though everyone could be, working at a somewhere else that's easier, at a blue chip firm, many of them quit these safe jobs to come work at Bitwise. I think that part of what motivates through those moments is, um, and in general is that you're part of this space and this movement and this thing that we think has merit in the world. And in context of that, the price up, the price down, um, is of course an important part of the story, but the main story is the introduction of public blockchains as new global platforms that create global standards and reintroduce trust in the internet. And I think that that is present even in bear markets. Of course, that could get disruptive, and that's something that we would take note of. But usually in bear markets, it's a price story, it's a capital market story, but the movement, the substance is still there. And I think that just keeping that in mind um, is the source of durable motivation.
Yeah, and going back to, when I asked about moat, you were talking about how, the people and the people within the firm are really kind of what make what gives a firm strength and capabilities. How do you view hiring? And do you think that, like, when you first launched Bitwise, did you consider yourself good at hiring? Like, were you naturally gifted at finding great people, or that skill set evolve? And like, how do you view the people that you want to work with? How do you bring them on board?
Hiring is so hard. Hiring is so hard. I think that hiring, and any entrepreneur or person managing a team or a business will in general say is everything and hiring is very hard. And then you take that, which is already hard, and you pull it into crypto, and it becomes even harder. In the early days, it's a little bit less now, but it's still the case. Um, I think when we got started, the entire global crypto industry was 1,000 full-time employees, which means, everyone you're hiring has not worked in crypto before full time. They may have invested in crypto, but that doesn't mean that they were strapped to the side of it 60 hours a week. Um, uh, and there's also sort of, I don't know if this is true of everyone's businesses. It probably is to some extent in crypto, but there's a question of how many of the things that somebody knows from a traditional setting are helpful versus counterproductive in a crypto setting. Meaning, if you bring on a portfolio manager from BlackRock to manage portfolios at Bitwise, in one sense, that's an amazing background because they've done it in a very professional, high quality setting. They have credibility around doing it. Um, in another sense, though, they've done it in a very tried and true established setting using very matured solutions and processes. And in crypto, it's very different. So it can go either way sometimes when hiring, whether the pre-existing experiences um, are really productive, or sometimes they represent sort of a familiarity with or a comfort in the processes of the TradFi world or the old world that just are not the case in crypto. Um, I will say that our head of index portfolio management, Jennifer Thornton, 20 years at BlackRock, managed $250 billion, very different systems, manages the portfolios of Bitwise for several years and is a superstar. So um, it can definitely work, but it's not, I wouldn't say it's just like a no brainer that you're building a payments business in crypto, and you say, I want to go get someone from Adyen or Stripe or MasterCard or Visa. That background will, sometimes it can be extraordinary, and other times you're surprised to discover it's counterproductive, because there are certain ways of the world that aren't true in crypto, and so things have to be unlearned. Um, so today the industry is larger. There are more people who want to work on it, and some of the best people you could imagine have sought jobs at Bitwise. Um, I think that yeah, so that is a real blessing from a number of years ago. Um, it continues to be, I think, like for many businesses, a thing that's really important. And there's science and there's art. Something I am very proud of on this front, though, is that um, I think that for many people, if they've met someone from Bitwise, like there's like a vibe. Um, and I'm really proud of that. I can't perfectly articulate what it is, but there's like a Bitwise vibe, and I love that. So we have we do a lot of interviews when we're hiring. Maybe 4 to 7 different people at Bitwise will meet a candidate who's exploring working with us, and I think that maybe helps in some way. I'm not 100% sure, but I do think that sort of competence is almost table stakes, um, but sort of stylistic cohesion, such that somebody that isn't at your company could meet someone in investor relations and could meet someone else in portfolio management and say, "Oh, yeah, Bitwise vibe."
Cool.
That to me is really, um, you have to hire capable people. I think hiring capable people who are sort of cohesive in vibe, for lack of a better term, is something that I think heretofore we've done a pretty great job of, and I just love the group of people at Bitwise. I mean, I say this all the time. Life would be so much easier if they didn't work at Bitwise. And yet 100 people coming from BlackRock and Blackstone and Google and so on and so forth choose the harder path. So just think about the types of people that these 100 people are. And then think about the fact that many of them work 60 to 70 hours a week and do it even when the market is down 20% and somebody says that the space sucks. So it's one of the greatest blessings of building the company.
That's amazing. Wow. All right. So how would you describe your management style? And then, you know, how would someone from your team describe your management style?
Well,
Are they similar, or do you think there's a discrepancy there?
yeah. All right. And Andrew, these are tough. Um, the funny thing about this, and also to some extent, some of what I was mentioning in the prior topic is that it's almost anyone but Hunter could give you a very clear answer here. I'm like maybe the least clear person. It's like, Andrew, how would you describe your personality? Like your best friend has that on lock. Um, you, however, you may also have it on lock, or you might find it harder to pin. Uh, I I'm very interested in the details, and I'm very happy for other people to do the work. And I'm pretty interested in everything. Um, and I try to show gratitude. We have 4 values at Bitwise. One of them is showing gratitude. We have a number of ways that manifests itself, but um, I I in general am always just sort of, I recognize not just the work product, but the life that is required to deliver the work product, and I'm constantly in awe. And I think at Bitwise, the maybe the thing is that we try to, when there are those moments of appreciation or gratitude, we try not just to feel them, we try to say them, um, and communicate those things that we appreciate about one another. So that's a part of the culture and something I try to do. Um, I ask a lot of questions, and sometimes it can seem like I think people might say that I work with that it can seem like I'm trying to get at something, or it might be it seem like a leading question. It's usually not. Um, it's usually just me asking questions, but I think that that's probably a part of the experience of working with me. I question assumptions, things like that. Just lots. I guess maybe in summary, lots of questions and very interested in the details. Um, and very appreciative amidst all of that.
Love that. Love that. As you've scaled the firm, what have been the primary or major bottlenecks? Is it, you can, because I'm thinking about like the people potentially, or it could be the market just kind of stalling in 18 or, whatever bear market there was, or maybe there's some other bottlenecks that I'm not aware of.
So many bottlenecks. The other thing that's interesting from an organizational perspective that I was just chatting with a colleague about the other day is that a system always has a constraint. So you can remove a constraint, and then something else will become the constraint. There's no system that doesn't have a constraint. There's probably in material science like some system that doesn't have a constraint, but in general, there's no system that doesn't have a constraint, which means there will always be a constraint. There's always will be something that is a hold up. And then your question is, how do you want to dial the gauges such that the water is flowing relatively satisfactorily? But there will always be a constraint, which again is just interesting from an organizational perspective. Constraints over the years regulatory constraints are massive in our business. We I think we worked on a Bitcoin ETF for 6 years. So the constraint there was definitely the willingness of the regulator to do that. I would say that a perpetual constraint in the space is people's this is clients and investors, but their familiarity, the development of their thinking, um, and a huge one that is sort of adjacent to this, um, that I feel like sometimes people just really, it sounds so trivial, but it's actually like maybe the main thing is their time. Um, um, Conviction in the space, having a correct understanding, having misunderstandings, yada yada. All of that is a function of how much time they have to spend thinking about the space. So if they're very time constrained and they have one very confusing conversation with some crypto bro or their nephew or niece, but they only have like the 1 hour in the next month to think about it, then that's going to produce low conviction, high confusion, and some amount of misunderstanding. So I think that there's so much about investors' orientation towards the space that has to do with the time constraint. We have, there was a bank that wanted to approve access to the Bitcoin ETFs, and they ended up being, I think, 6 or 9 months late. Why? Was it conviction? Was it misunderstanding? No, it was time constraint. Time constraint. There are other things going on. They're trying to approve private credit funds right now. There's a bunch of new active ETFs coming online, and it's zero sum on time. So I think time constraint amongst clients is a huge one. There's the regulatory piece that's getting better. It's still not played through. When will a Solana ETF be approved? That will be set by the regulatory constraint. When will a bank flip on access? That will be set by time constraint. When will this institutional client get the investment committee together to authorize the investment? That will be set by the time constraint. And then I would say on product development, Bitwise does have a human capital constraint. We can only do so many things at once. We get a lot. Right now, we have so many requests for different types of products. And we have 100 people working full time on crypto, and we have every piece of infrastructure. We have a registered investment advisor, commodity pool operator. We have a supervising broker dealer. We have a 40x trust. We do publicly traded partnerships. We do private funds, Cayman master feeder. We do separate account. I mean, we have every piece of infrastructure. We have tons of years of experience. We're counterparties to almost everyone. And we have 100 really high caliber people doing it every day, every week. But even then, there's a limitation to the output there. So we have 20 open headcount. We're going to increase. We're increasing the size of the team. But I do think on investment, the creation of new investment solutions, there is the human capital constraint there. So I think that those are the three ones that I see, and they impact different parts of the business.
All right, last one before the closing questions. 10 years from now, where will Bitwise be? Are we looking at exit, IPO, maybe stay private forever like Stripe? What are you thinking?
I don't really have a goal. The way I think about the goal there is that I want to build, and I think all the people involved with Bitwise, they want to build an enduring brand that people think very highly of as the alternative investment manager that you can trust and love working with, to participate in the opportunities of the space. And I hope that we have a lot more clients who are very happy with us doing a lot more things, in a lot more meaningful ways, such that it really impacts their objectives. I think if we can do that, then the enterprise value story takes care of itself. That's how I've thought about it. I don't know if that's right or wrong. I'm not a genius. And there, I think that's the reality is just we're kind of, from my vantage point, many of my favorite people in the world are shareholders of the company, from Henry Kravis to Electric Capital, Highland Capital, General Catalyst, Coastal Ventures, Elon Gill, Naval Ravikant. I want all of these people to have a good experience of the company. Maybe most importantly, all of the 100 people here who could be doing something else are shareholders in the company. I don't want them to have a good experience. So I'm not blasé about the value of the company and the equity of the company. My theory there is just that solving for an objective there is not the optimal approach. The optimal approach is to solve for clients and building the business, and then to evaluate with a flexible time horizon and low time preference, what's best for the equity holders. So um, that is a pretty, I've now ventured into part of this interview where I'm giving very theoretical and uh, sort of abstract answers, but that's basically how I think about that topic.
Amazing. All right. Time for the rapid fire closing questions. All right. What is the best advice you've ever received?
Oh my God. So much. Can I give you the rapid fire? Uh, uh, Naval Ravikant called me in January of 2024 and said, you need to tweet more.
Really?
And I think that wound up being very good advice for both me and the company.
Wow. It be because of it just, wow, how come?
Well, I'm first of all, Naval is just an insanely wise person, and he has a very large Twitter following. And if I had to distill his theory, which I probably can't do completely accurately, his view is just in this day and age, the way that you can build an authentic connection with a brand is the people need to communicate, and they're communicating on Twitter. So if you're not communicating there, then people don't have an opportunity to authentically understand who you are and what you're doing. So you need to be communicating, and Twitter is the forum for doing that. So I think that was the line of thinking.
Amazing. All right. What is one piece of content, book, podcast, movie, etc., that had a major impact on you?
One of my favorite books is a book called, there's a lot I could say there, but there's one is called Engines That Move Markets. I believe that the author is Alistair Nair. A lot of people, it looks at maybe the last 200 years or 150 years through the Industrial Revolution, the advent of the steam engine and the railroads in the US, the automobile, the telephone companies, radio. A lot of people are familiar with those topics. They're familiar of those stories through the lens of the consumer. What was the way in which life changed, lifestyles changed, the world changed, but they're not familiar with those topics through the lens of investors. Was it a good idea to buy debt, the debt issuance from the Southern Pacific Railroad? What information did you even have at the time? The railroads were the ones who invented variable costs. I don't know if that's interesting to you, but there was no, God didn't like create Earth and then invent variable cost as a financial concept for accounting and building P&Ls. They invented it because they had so much net interest expense from their capital expenditure that stripping out the variable cost was actually quite useful for interpreting the expense load. So, anyways, the book goes back and produces primary financial information from those eras, and sort of allows you to contemplate those moments from the lens of an investor. And I just think that's a super interesting aperture to revisit a very familiar context, or moments in the last 150 years, but to look at it through an investment lens. So Engines That Move Markets is a book that really was quite one of my favorite books and quite interesting to me.
Love it. All right. What trend is totally underhyped? What trend is totally overhyped?
I think that most things are underhyped. I think that DeFi is wildly underhyped right now. I think that the developer ecosystems and app ecosystems on the layer ones are underhyped. I think that the potential intersection of AI and some of the resulting things from AI and public blockchains is underhyped. I think that DePIN experiments are underhyped. What I think is underhyped is conversations about use cases in crypto. I think what is overhyped is conversations about price action, and every flavor of price action and speculation about market actors and so on and so forth. I think that there's way more information about price action or takes on price action than is productive. And if I asked you to go find the case study or the story of the most compelling DePIN use case today, you won't be able to find it. You have to go searching. Or what are all of the real world use cases being built on Aptos or Avalanche right now, or Chainlink? Much harder to find than like 1,000 theories on why the 30-year treasury yield touched 5% last night. So I would say underhyped is stories about use cases, and overhyped is commentary on intraday financial price action.
So true. Who do you admire?
I have a lot of admiration. Maybe the interesting, I mean, I admire the staff, all the people at Bitwise, because again, they're, I think all of them are choosing a potentially meaningful path, but a harder path. And I just think that's remarkable from a career perspective. People think about their friends and the career choices they're making. It's actually quite uncommon, I think. I really admire all of Bitwise's shareholders. On the About page of Bitwise's website, you can see some of them. They're just extraordinary individuals. I feel lucky to chat with them. I really admire financial advisors. These are a lot of our clients and the people that most individuals entrust as the single person to help them be successful in this essential component of their lives, which is their money. Um, I can't help myself in giving a long-winded answer during the rapid fire section, but I think the thing that might be most interesting to say that I admire is I think that uh, entrepreneurs and inventors in the crypto space that have the stamina to go more than 5 years. Um, I think that this is like under contemplated. People see a new app or L1. They're interested in the backgrounds of the team. They're interested in the narrative. They're interested in the technology. Um, but somehow they're not thinking that much about, can this person endure for 15 years? Okay, not 15 years, 10, 10, not 10, 5. Okay, so what's the plan after 5? Um, and there's certain founders, Hayden at Uniswap, Stanny at Aave, the Avalanche team. You have to give some credit to Ripple. Ethereum has endured. The Solana, I just think that the teams that have had staying power through thick and thin are really impressive to me, and I really admire that. And I think that's really hard in life.
Amazing. All right, last one. What is your proudest accomplishment?
Yeah, it's so cheesy. You're just gonna shake your head at me. Nobody's gonna be interested in this answer, but I honestly am every day like blown away by the organization at Bitwise. We it is the most complex gearbox you have ever seen in your life. It's like 10 interlocking grandfather clocks, handmade Swiss dials, little gear turning big gear, turning another gear. There's a pendulum swinging. There's like a spring loading. There's a vibration. I mean, it is absolutely remarkable. And Bitwise is not sort of 50 engineers and 50 salespeople. Bitwise is fund admin and controls, risk, compliance, legal, distribution, capital markets, portfolio management, derivatives trading, derivatives quant. It is a very broad set of capabilities, and that then all have to interlock their gears, and it's just stunning to me to watch all the motion and then to see everything that's moved each week. So that is actually my answer and the thing I think about almost every day.
Amazing. Hunter, thank you so much. This has been absolutely incredible. Where can people find out more about yourself and more about Bitwise?
On Twitter, I'm H Horsley. Bitwise is Bitwise Invest, and bitwiseinvestments.com has a lot on the website as well.
Amazing. Thank you, Hunter.
Yep, great chatting.